Good morning. My name is Frank Grinnell. I've been advising professional money managers and investing in the stock market for over 20 years. It serves as my day job, but most importantly, it is my absolute passion. On Street Views, I offer my daily viewpoint on the stock market in under 7 minutes. I will cover things like the global macroeconomic picture, the mood of the market, company-specific news, secular trends with some actionable sector and stock calls. I hope my insights are useful to you, whether you are a professional money manager or a passionate investor. At Grinnell Capital, we actively manage dynamic stock and ETF models for financial professionals and their clients, as well as individual investors. If you want to learn more about what we do, send me a note, frank@grinnellcapital.com. You can also find more of my insights on Twitter @GrinnellFrank. And now, today's Street Views. Hey, good morning. It is Wednesday, the 9th, 2022 of November. No red wave. Futures down a bit, yields and dollar up a bit ahead of CPI tomorrow morning. Hoping to see a sub 8 print. The goods component heading south pretty confidently, but the services component and other areas like medical still elevated, unfortunately. So we'll see what happens there. You know, we took off some equity exposure yesterday, industrials, energy, some niche tech stuff that we own that we're up huge on. We also added to volatility. I'm just not trusting, I'm not trusting what I'm seeing out there. It doesn't feel right now, and I don't know how else to say it besides that, just doing this for as long as I've been doing it. We've been playing long, crude oil and constituents there, nat gas. Both those act really heavy. Nat gas is down another 6% today or something. The thing swings like crazy. Crude oil down again. Looks like if you look at USO, it's going to break down below the 50-day this morning after just going up through it a couple days ago. So not great action. We may just continue to take a little bit off the table there. More on the integrated and E&P side. We're not going to take off the oil service. I think that's got a ways to go. But make no mistake, can come in also with the price. The triple Q trade we put on yesterday, we talked about that. In our technical work showing selling exhaustion and a potential entry point. So we did do that yesterday. We're going to have a real tight leash on that one. I'm not going to ride it down for any kind of loss whatsoever. So it's got to work in the next few days or it's gone. Is kind of my thought on that, just because that's, again, how much I trust what's going on right now. Taiwan Semi, looking up again today. We mentioned it yesterday on the heels of Global Foundry's good quarter. We're not there, but, it's interesting, I think, for an entry point, again, for a partial position. If you're going to buy in, fourths or thirds or something like that, I think it could make sense. We're going to watch semis real close in general as a group here, because Semi Capital has really led most recently. It's been a very strong group. I feel like they've gone up like every day for 2 weeks almost. So we're going to take a real close look at that. KLA Tencor is right at its 200-day moving average. Will it break through to the upside or will it roll over? I'm kind of in the rollover camp, but we shall see. Housing sales came out for October. Denver sales down like 40% year over year in terms of activity and actual sales. Just, and they're not alone. There's multiple cities out there that are just on the struggle bus. That trend will continue. It will impact so many areas because pricing is obviously going to be coming down. When you got that kind of a decline in activity, obviously interest rates have something to do with it, but buyers and sellers are certainly not matching up on their intentions. And then also on a positive side, gold had a really good day yesterday. It is down a little bit this morning with the dollar being up, but we added to GDXJ. We own the junior miners in the form of an ETF yesterday. We added to it as GLD traded really well and confidently broke above its 50-day moving average. So we'll monitor that pretty close. In order for that to work, in my opinion, you've got to have a continued sort of break in the dollar. The dollar really starts to resurge itself to the upside, which could certainly happen. Then this trade probably doesn't work, or it's just too early. So we'll see on that too. And that's it. I'd say, just in general, I think it's time to be a little bit careful. Don't go out too crazy on the risk spectrum and even maybe bring some stuff in. Like I said, we added to some vol yesterday. That felt like the right thing to do. Have an awesome day. Talk to you tomorrow.
disclosures. Grinnell Capital is a state-registered investment advisor. Services offered by Grinnell Capital can only be offered in certain states where Grinnell Capital is registered or meets required exemptions. Registration does not imply a certain level of skill or training. For additional information about Grinnell Capital, including its services and fees, please review the firm's disclosure statement as set forth on Form ADV and available at no charge at advisorinfo.sec.gov. This podcast is provided for informational purposes only. The information contained herein should not be construed at the provision of personalized advice and is subject to change without notice. This material should not be considered as a solicitation to buy or sell any asset or engage in a particular investment strategy. Investing in securities involves the risk of loss, including loss of principal invested, and may not be suitable for all investors. Past performance is no guarantee of future results. This podcast contains certain forward-looking statements which indicate future possibilities. Actual results may differ materially from the expectations portrayed in such forward-looking statements. As such, there is no guarantee that any views and opinions expressed will come to pass. All expressions of opinion reflect the judgment of Grinnell Capital as of the date of publication and are subject to change without prior notice. This podcast contains information derived from third-party sources. Although we believe these sources to be reliable, we make no representations as to the accuracy of any information prepared by any unaffiliated third party incorporated herein and take no responsibility therefor. This podcast is provided with the understanding that Grinnell Capital is not engaging in rendering legal, accounting, or tax services, and we recommend that you seek out the services of professionals in these aforementioned areas. The principal investment focus of the accelerator model, the strategy, is to achieve strong relative and risk-adjusted returns, primarily by investing and trading in securities issued by companies that focus on the global information, technology, consumer, healthcare, industrial, and infrastructure sectors. These sectors are characterized by robust secular growth, an abundance of both new and maturing product cycles, a high degree of competition that creates the potential for relative winners and losers within a subsector or theme, a high degree of revenues and earnings volatility, rapidly changing sentiment and public perception, significant yet unrealized potential for globalization, and superior relative liquidity. Investment in the strategy is speculative and involves a high degree of risk. The second investment model is called the ignition model. The ignition model is an all-exchange-traded fund, ETF, strategy with investment objectives similar to the accelerator model. This model seeks to capitalize on long-term growth trends experienced by the market leaders in various areas and sectors. The ignition model will also seek ETF investments based on cyclical forces experienced in the U.S. and the global economy. This model is also designed to have the ability to offer some downside protection in the event of significant market stress through investments in ETFs designed to take advantage of market volatility. The strategy's performance can be volatile. Grinnell Capital has total trading authority over the strategy. The use of a single manager applying similar trading programs can mean a lack of diversification and consequently higher risk. For more important disclaimers, please visit our website, grinnellcapital.com.